Welcome to Kitco News. I'm Niels Christensen. We're here at Mines and Money Toronto. I'm here with Gianni Kovacevic, chairman of CopperBank, and you describe yourself as a realistic environmentalist. So the first question I want to ask you, UN came out with a scathing report last week, talking about climate change and stuff like that. My question is, what role does copper have in this whole climate change debate?
I never get involved in the debate. I let them hash it out. They come up with solutions, and they have a scathing report that says we're not doing it fast enough. Perfect. I like copper. Copper is the Achilles heel to green energy. Now, I've been saying this for a long time. I say in my book that the greener and cleaner that we create energy, the more that is demanded of copper. Why? It's the enabler. Now, aluminum and copper. And if you look at where we are in the world right now, so Shell, Royal Dutch Shell, came up with their scenarios, and within that, they say, how will we adopt into this greener and cleaner energy? So if you look at the middle of the road path, today, as we speak, 19% of final energy use is electrification. And that number is going to climb to between 50 and 60 to enable us to go to this 1.5 degrees. Where does the copper come from? Because the first 19% took us 120 years. And there is an amount of copper per application, the way we create, transfer, utilize energy. The new types of electrification, electric buses, electric cars, offshore wind, solar parks, all of it, I don't care. It takes a power of magnitude more copper. So just imagine what I'm saying here. What took 120 years is going to be compressed, and we're going to triple that in the next 40, and the amount of copper in each application is going to be 2 or 3x more. That's pretty good for the demand side.
So are you disappointed in the price then? I mean, and you're not the first to say that, we just have to have, the global economy is growing, copper demand is, there's this massive imbalance in the supply-demand fundamentals. And yet, we're below 325. We're below 350. What gets us back to where we were, in July? Or what gets us back to when everybody, the big breakout?
It's a commodity. I don't care if it's hogs or it's logs. And it's a trade. There are people that are going to be positive on any commodity and negative on any commodity. It was actually middle of June. So middle of June, copper was $3.30 a pound. It tried to test it the third time, and then came the actual first tariff. Then came a second tariff. So there are people out there, rightfully so, they want to be short or negative the global economy. They want to be negative on China. And there's many ways that you can do that. For them, one way is you go against copper. It's the old orthodoxy, it's the PhD of the economy. Now it's changing because it's the Achilles heel of the future of energy, but that's not a page 1 story yet. That's still on page 16. Eventually that'll be there. Well, so look at these traders. How do they do this? It's interesting because the warehouses have collapsed. I'm talking about Sheffy, Comex, LME. It's like a ski slope. And at the same time that the copper prices come off. So what the hell is here going on? Well, there's new ways that people can trade copper. It's getting more sophisticated, this trade, but a lot of it's went from LME to Sheffy. But what people have missed is that the option, not futures, but the options that they've layered into the trading of copper, Sheffy only happened 6 weeks ago. Comex only happened last year. So for these clever people, there are many tools in their kit bag that they can use in the short term. And of course, a market in the short term is a voting machine. And they're voting that that's going to be negative. But in the long run, it's always a weighing machine.
Does CopperBank, because you guys have a bunch of projects, it seems like you're actually always trying to find new projects. Does copper need to go higher to see the end result? I mean, how do you navigate the environmental waters right now?
Well, here's some interesting factoids for people, hints from Heloise. We spent $100 billion looking for base metals in the China supercycle. It now costs, because of the lack of discovery, the success, between 3 and 5 cents per pound to establish a reserve or resource pound in the ground. So we have the ability, CopperBank, our business model, is to acquire projects that are already established, that have had tens of millions of dollars spent on them, We're acquiring these projects, Nils, for 1/5 of 1 penny per established pound, 1/10 of 1 penny per established pound in the ground. And we have a pretty simple criteria. We want projects that are in what we call safe jurisdictions. Ideally, the projects where the worker will go home at the end of the day if it was to become a mine. They're all located in the United States. We have the benefit of a lower tax rate regime, and we have also research. We're buying, effectively, it would take over $120 million to duplicate all the work on CopperBank's portfolio. So when the market's negative, are we buyers? Absolutely. One more Ben Graham wisdom, I am a contrarian. I'm a realist also. So I'm an investor that buys from pessimists and I aim to sell to the optimists. So we believe, I lose no sleep at night, that the demand for copper will be strong. CAGR growth rate 4, 5, maybe 6%. Not for next year or 2 years. I'm talking for the next 20 years. Demand will be strong. Where will the supply come from? Well, it's going to go to projects like I just described, well situated, that could actually go through a development arc in a cycle.
Do you like U.S. projects then? Is that the criteria for you to be at least in North America?
Well, if you look at where can the worker go home at the end of the day, you're really limited. You really come down to a few jurisdictions. Arizona perhaps is the best place. Nevada, great place. Alaska, great place. That's where our projects are located. If you're in Chile or Peru, rule of thumb, approximately 1/3 of your operating costs forever, Nils, is moving the men and women in and out of the field, housing them in comfortable accommodation with warm meals. Now, if you have a 40 or 50-year mine life, we're talking about $10, $15 billion over the life of that mine. That never goes away. If you're in Arizona in the Copper Corridor, they go home with their lunchbox. That's a zero line item. That matters. And that should, in my view, forgive some sins with the various projects, because that's something that an operating company has to look at.
Perfect. Well, thank you very much. Thank you for your time. Thank you for watching Kitco.com. Stay tuned for more from Mines and Money Toronto.